strong start. Hello everybody. Watch Talk Stocks. Sorry it's taken me like a month to film this. Chaos has ensued, a new layer of chaos, which I thought was not possible. But to get to the point, I opened a brokerage account at Charles Schwab about a year ago, had no idea what I was doing, and have made $12,000+. I initially put in $3,000. I also put $1,500 into another account, but I didn't really do anything with it. It just like rotted. I actually lost some money on it. Here is a visual of my current account value. You can see the several months where I just kind of let my money sit and it was all tied up and in the negative and I couldn't do anything. And then some of my biggest gains just happened these past few months recently. I'm not even at my highest point right now, so it fluctuates. My dad also started with me and he's playing with a lot more loot. Here's a screenshot of his account value. But learning together was really, really valuable. I would suggest sending this video or something to a best friend of yours, a family member, so that you can learn together because it will help you immensely. And I also feel like I need to clarify that I started out at zero, like -2. Like I could not have known less about what the stock market was or economics in general. So this is truly feasible, and I would love for you all to achieve the same kind of success that I have happened to stumble into, but in a much faster and less trial-by-fiery fashion, which is what brings us together today. Disclaimer. I don't know what I'm doing. I have no qualifications. You should not trust me. I am just a man. Do not sue me. Entertainment purposes only, etc., etc. Moving on. We first got to start off by debunking a couple of misconceptions. Number one, you don't have to do math. I mean, like, if you're savvy and you feel like conjuring something up with your little Jimmy Neutron nog, then by all means go for it, but it's not necessary. Two, you don't need to have a lot of money. I used my savings because I could, but Charles Schwab doesn't have an account minimum, so you can literally put in a penny, although penny stocks are rough, so maybe aim for like, at least 20 bucks or something. There are other apps which have a similar deal, one of which is Robinhood, and you should all disown. Don't use Robinhood. Acorns is another option, but I will say that Charles Schwab has a fantastic support team, and I have called them so many times. They're very good. Very good! So, I would suggest taking that route. Also, I use Charles Schwab, so if you want to follow along with the videos or want my help specifically with something, that's all I know how to use. 3. This doesn't have to be your full-time job. It can if you want it to be. There are different strategies that people use, which I will get into later, but this can be as active or as inactive as you would like it to be. I mean, obviously active is the faster way to make money, but you don't have to be like glued to 7 monitors all the time, sniveling and like eating your porridge with the news on in the background. I just kind of use the app on my phone and generally pay attention to events, which I have to do anyway. Does it make me feel morally dingy to hear about national events and immediately wonder how I can profit off of them? Yes. So, the stock market is a thing. I'll liken it to iCloud or Bitcoin in that it is not real. It's not a tangible thing anymore. It's just an online marketplace wherein investors, us, can purchase stock in or shares of a company, which means that you become a partial owner. So if I hold Tesla stock, I own part of Tesla. So when a company decides to go public, they're saying, okay, hey, let's open up 10% of our company to be traded on the stock market. So the company keeps most of the pie, but they then slice up a smaller section to sell for money. And the buyers of those slices can then trade them with other people who also want a slice. And they can say, well, hey, I paid a penny for this, but if you want it, you're gonna have to pay 2 pennies. So the company ups their equity by simple measure of supply and demand. So let's say I buy 1 share of Tesla for $850. That's kind of where it's been lately. I can then make money if I sell that share at any price above $850. I can lose money if it goes below $850. The price of a stock goes up when people buy it and down when people sell it. You know, like those little line graphs that go boop, 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 boop. When it goes up, and they never really just go up, there's always minute fluctuation. That means people are buying into it and pushing the price higher and higher and higher. The demand is going up, and then it will reach a little turn, and that means that more people are selling it than are buying it, and the demand is going down. It kind of works like an auction. The more bids, the higher the price. And the rate at which all of this is happening is crazy. The price fluctuates constantly. You can buy or sell shares from 9:30 a.m. until 4 p.m. Monday through Friday. There are also pre-market and after hours wherein you can still trade select stocks, but don't you worry about that. Hot tip. May I suggest watching Silicon Valley on HBO Max for a lot of laughs and knowledge gaining. And probably some trauma if you've ever tried to start a business. Now you have some choices to make before you start trading away. Mainly, which broker you are going to use. Charles Schwab is my stock broker. And what type of account do you want to open? These are typically your options. 1. A standard brokerage account. You have to be 18 years old. You can put in as much money as you want. You can take it out at will, provided that it's not invested in something. You pay taxes on any money you may make off of stocks that same year. And there are 2 types of standard accounts. Individual, which means it's just you, and joint. This is one of the accounts I have. It's the one I put $1,500 into. Joint just means that it's you plus someone or multiple someones else. I did it so if I'm caught up doing something else, my family members can access my account from their own phones and save me, just in case. 2. Retirement accounts. These are complicated. You can have an individual retirement account, an IRA. There are many subcategories of this, but basically you want a Roth IRA. A Roth IRA means that you pay taxes on it when you put the money into the account. When you take the money out as an old person, you don't have to pay any taxes. This is good because as time passes, your money will grow, and more money equals more taxes. So this is a way to circumvent that and yeet the system, if you will. There's also a 401k. These are usually offered to you through your employer as part of your job benefits. Good employers will match the amount of money you put into the account. If they do that, you want to fill that up before laying heavy into your Roth. It must also be said that you can only put $6,000 per year into a retirement account. If you need to take money out before you're 59 and a half, you're hecked. Doomed. Tweet. Education accounts. I don't know too much about these, but for what it's worth, you can have a 529 savings plan, which is different from a 529 prepaid tuition plan, which locks in the in-state tuition price at a certain school. Anyone can put money into the account for the beneficiary, the person who gets the money, to use at an educational institution. 4. There are custodial investment accounts for kids, but I know absolutely nothing about them. You can open an account in person, on the phone, online, and they will ask you whether you want a cash account or a margin account. You want cash. Margin means borrowing from your broker, which can be risky. Once you open an account, you can then put money into it and it just sits there like a bank account but without interest until you invest it. And the actual trading process will be addressed, say it with me, in another video. If you really truly want to be disengaged, you can hire a full-service broker, which means that an advisor or sometimes a robot handles your money for you, but I think only rich people do that. Everyone has their own personal investment philosophy, but most of them can be categorized into one of the following. 1. Day trading. This is the stereotypical sniveling dweeb with 7 monitors in front of him. It means that you buy and sell stocks within the same day. You're trying to earn a daily income, let's say you aim for $100, by surfing the tiny fluctuations in various stocks. You have all kinds of softwares and graphs and stuff to help you buy the right stocks at the most lucrative times. Usually, no matter what, you sell out of everything at the end of the day, losses and all. Some day traders and swing traders just mimic the actions of really successful people, like Warren Buffett, for example, who is an elderly stock god and he owns a business that does things called Berkshire Hathaway, and he heavily analyzes stuff, so people just do exactly what he does as best they can. which is like not the worst of plans. I saw a TikTok the other day talking about how you can go to openinsider.com to follow what the big CEOs are doing with their stockies. Have not tried, probably will. 2. Swing trading. This is what I do. I research and buy stocks that I think are going to go up, and I hold them until they do. Unless I miss the wave or it never goes up and I was just wrong, and then I take the loss. I hold stocks from a few days to a few months. Sometimes I just ride the waves of one particular stock. This requires a medium level of involvement. I think it's perfect for the market right now. 3. Long-term investing. This is what is usually done in retirement accounts. You put your money into a stock or stocks that are stable and you think based on history will continue to keep rising slowly. Banks, AT&T, Disney, Apple, the big companies. Or you can put your money into a fund of some sort. There's a lot of them. I'll talk about that in another video. But it's the same basic concept. It's going to slowly rise over time and there's very little risk that you will lose your money. You also tend to earn dividends off of these stocks, which is money that the company pays you as a little thank you for owning their stock each year. That is what people who are smart with their money when they're young live off of when they're old. There is an incredible amount of information left on just the basics of this topic, like how to actually trade and an ungodly amount of jargon and stuff, so I will be making more videos about this. Subscribe if you so please. You can also reach out to me directly on social media and I will be happy to assist with what I can. If you do go with Charles Schwab and are planning to put at least $1,000 into your account, you can use my referral link to get $100 back. That link can be found in the description below, along with a transcript of this video, timestamps for each section, some helpful articles, and a list of my filming equipment. See you next time on Reading Rainbow.